We have seen such a reverse in interest rates in the last 2 weeks. I even texted a loan officer buddy of mine this week and was like, hey, I'm going to call half the investors on the market. You call the others and tell them to figure this out. This is getting out of hand. And it's almost like we had this nice little sweet touch of freedom from these interest rates as we saw rates were at 5.99, and then they just shot up over the last 2 weeks. I'm here to kind of dive into that today and go over the week in review. Welcome back to another mortgage news and rate update. My name again is Kadyn Nannini, loan officer in Phoenix, Arizona. You can find me at Millennial Loan Officer on the other platforms, but ready to dive in and kind of go over the pieces of info that happened this last week and then also forecasting out for the weeks and months to come. To start off, we had two inflationary reports that came out this last week with the CPI and the PPI, the Consumer Price Index and the Producer Price Index. Both came in just a touch hotter than as were expected. Nothing crazy, but just a little bit more than what investors would have liked to see. On the CPI side, we saw that inflation came down year over year from 6.5 to 6.4%. So that's great that we saw that, but the month over month number, it did come in at 0.5%. So a little bit of a hot inflationary reading, something some experts kind of saw that could be a tough report. But nothing that would knock us off the track of trying to get rates down by the end of the year. Both came in, like I said, a little higher, but it does not alarm me. And I want to talk on that a little bit more towards the end of this video and my forecast going forward. Along with rates coming up, no surprise, we had mortgage applications come in and they've dropped 6% from the last week. No surprise. And I think there's actually a little bit of a consumer sentiment when it comes to that. I think a lot of people came out from the new year ready to purchase, got out, looked, and realized that inventory is not what we want it to be. There's not a lot to choose from when you hit the market. It's a great time to be able to purchase a home, but you still have to find the right home. And I think a lot of people are having to struggle with that. And then if they do find the right home, any desirable home is going to get multiple offers on it right now because buyer demand is so high. So like I said, a lot of people dealing with the competition as well as just trying to find that right home, maybe kind of backed off a little bit. Some people might have been looking before doing the application. That's kind of how I feel that has happened, and a little bit of buyer demand maybe has dropped off after the hot start to the new year. Along with inventory, we had housing starts, and housing starts in the month of January were down 4.5%. Doesn't help us. We need inventory. We need to get builders to be built, and they're on it. They're trying to build as fast as we can, but we just have so many millennials entering the market, and that buyer demand is through the roof. It's almost like what's going to give more? We need inventory in one fashion. Is it we going to build more or more sellers coming to the market? That's what's tough right now. We have sellers from all of the last 2 years with low interest rates. If they really don't have to move, they're not going to. So those homes are not hitting the market. Mixed with, as soon as new builds hit the market, these builders are offering insane incentives. So we have those flying off the shelves. But again, it's not, we are not building enough. And this is where people are kind of getting weary when they're getting pre-approved and then they're getting out and looking and there's no inventory. It's a full circle thing right now. So we need that inventory, but where's that source going to come from? I don't know. And it might take interest rates coming down into that sweet spot that people think somewhere between that maybe 4, but most likely 5 to 6% range, where it might entice people to go, that interest rate's not horrible. I can sell my home and move up. That might happen this summer. People have held their rates for a little bit. They may just get, realize, oh, this home isn't worth that certain rate or payment. So maybe we'll get an influx of inventory coming later in the year. There's a lot of stuff we can't control or foresee when it comes to just human desire, what people want to do and how they're acting. So there's a lot of stuff you can't forecast for, and that potentially could be something. Going back to interest rates and our inflationary reports that came in this week, I want to talk on that. We had a couple of reports that were not, up to par from what investors were wanting to see. Rates moved, I'd say, about 1/8 to 1/4% this last week, so ticked up from the week ahead. So a little combination of maybe about a half a point up over the last 2 weeks after we saw that near 4 or 5 month low at 5.99%. And hey, sorry, I'm shooting outside. The umbrella's getting in the way. Live from my backyard. But I want to talk on, it's almost like the housing market. Over time, you'll always win 4 or 5 years down the road. But like right now, home prices did dip from last summer. But if you hold the home that you bought last summer, 5 years from now, you're going to be up still. I feel like that's how we're going to see rates react. Over the course of 4 to 6 months from now, we're going to see rates on a downward trend. But we're going to have to deal with volatility up and down over the courses of weeks or days, and we may get one strong day where we really drop those rates. That is just something that I foresee happening, and I don't want people to overreact when rates move a little bit, when in reality what we need is over the course of 4 and 6 months. We have to be patient. Rates will come down as inflation comes down. We just saw inflation drop yet another 0.1%, and we should really see some active, big movement come May. As we pop back here, I want to show you this movement of rates. Over the last 2 weeks, you can really see we dropped, and it is from this amazing point that we were at. So we've really started to drop, and like I said, this is an inverse graph. So down is actually interest rates ticking up, but we'll be back here. I'm not concerned. It'll take a month, it'll take 2 months, 3 months, I don't know, but we're gonna get back to that point. We just have to be patient. Overall, not a lot of other news. We have the Fed. The Fed came out and spoke, and they're teetering, trying to see, do they need to be a little bit more aggressive than their 0.25% interest rate hikes each month, based on a couple of the jobs report over the last, the 2 weeks ago, and then this last week. So we'll see what they do. Let's hope they stay calm in their interest rate hikes and stick to plan. But with that being said, we'll have to take this week by week. We got another week coming up where we'll get some good information, see where the market's headed. And until then, I hope everyone has a great day. Don't ever be afraid. Drop some questions in the comments. I'll put my information down below. Reach out to me on social media. Send me an email. And don't forget to subscribe to the channel and hit that like button. I would love to gain as big a following as possible to share all this information. Take care, everyone, and I'll see you next time.